Hello, very good morning to all, and welcome back to today's Daily Dose of Market Insights. I'm Kelvin here again. Very good morning. Today will be Thursday, the 29th of May, 2025. So as usual, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. Any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, let's have a quick recap what has taken shape yesterday and as well as in today's early Asia session in terms of the news flow, economic data release, and as well as their various price action impact on those broad-based cross-asset classes that we cover on a daily basis, the major US dollar pair, the major stock indices, and as well as the two key commodities market, gold XAU/USD and West Texas crude oil. So let's start with the performance of the US stock market first. So yesterday, the performance of the US stock market was rather lackluster. So I would say it's more of a consolidation. Still recall for those who followed my daily dose on a daily basis, we've in fact flipped to a intraday trend bullish bias since late last week after that initial dip on the prior Friday. And what we could expect over here is that we expect a bullish bias right after NVIDIA earnings announcement in today's early Asia session at around 4:30 a.m. to 5 a.m. Singapore time. So what I could see is that yesterday, while market is awaiting for NVIDIA release of the results in the US stock market, they're actually consolidating. So the SPX was actually down by the close of yesterday's US cash session. That means, i.e., by the time it hit 4 a.m. Singapore time in early today's Thursday, 29th of May, negative 0.56%. The Nasdaq down negative 0.45%, and the Dow Jones down negative 0.58%. The Russell down by negative 1.08%. But this did not lead to further weakness. In fact, it encouraged or so-called attracted deep buyers, where upon the release of the NVIDIA results, it has this potential bullish catalyst where the E-mini futures on the S&P rallied by 1.6%, and the most definitely was Nasdaq 100 E-mini futures up by almost 2%, given that it has a larger component weightage in NVIDIA. So what do I mean by this? So if we were to look at the futures price, so what you could see over here is the Nasdaq 100 futures. So what you could see over here is that by the time it closed the US session over here, this is the close. So intraday low all the way up to 2.35. Okay, in fact, is right now, 2.17%. Okay, 2.17% over here by this sharp V-shaped recovery. So this has really come in within our expectation, because in the so-called the intraday technical outlook, which I highlighted yesterday, we do have a bullish bias on the Nasdaq 100 and as well as the US Wall Street 30, representing the Dow Jones Industrial Average. Both hit our support and shaped that desired rally, and also hit the upper limit of the resistance level. The first resistance level, I would say, on Nasdaq 100, which is 21,755, which I already highlighted earlier yesterday. So what are the trend buyers for today? Key levels to watch. So later when I covered the second segment of today's daily dose, so let me touch on the first segment first of the news flow and fundamental drivers. And also one particular news flow coincidentally also fueled this ongoing risk on sentiment in the Nasdaq and S&P 500 E-mini futures in today's early Asia session as we are speaking, is a US trade court. Okay, we know that US, there are various branches of legal branches. So you have the Supreme Court, we have the courts that are pertaining to more industrialization approach. Then we have a US trade court. So the US trade court right yesterday's by the close of the US session, that means early Asia session today, has deemed that US President Donald Trump's current global tariffs as illegal, which is a major blow to his economic agenda. So the court ruled that Trump has wrongfully invoked an emergency law to justify the tariffs, which were imposed on China, Canada, Mexico, and in fact against the rest of the world. And the Trump administration has decided to file an appeal, and the case will be ultimately decided by the US Supreme Court. So we know that US Supreme Courts in the last year or so has been, the judges in the Supreme Court in the last year or so has been deemed to be more friendly towards Trump after he kind of selected his close, put it with it, uh, judges that move in line with his view. All right, so something to look out for in a couple of days that could drive two-way volatility in the global markets. But at least in the short term, it starts to spark a risk-on rally in the Asia major stock markets as well. So as we are speaking right now, the Asia markets also rallied pretty strongly. The Nikkei is up by 1.7%. The Hang Seng Index not that great, 0.3%, and the higher beta Hang Seng Tech is up 0.7%. Other ASEAN stock market will be the Singapore STI is down by negative 0.3%. The Kospi is up 1.7%, and the AXX 200 is up by 0.6% over here. So net overall, it's still a rather risk on behavior that's being seen on the North Asia and the Southeast Asia stock market as we are speaking right now, with the exception of Singapore being the underperformer that is currently down by negative 0.3%. And what's interesting over here I want to highlight is that we know that gold has really hit a support level that we highlighted yesterday, 32,220 over here. And what's the price actually interesting of gold is, yes, gold today kind of open on a weaker setting in today's Asia session, down by negative, I think negative 1.13%. So let me open up the chart of gold over here, gold XAU/USD. Okay, so this is the price of gold. So I could see that gold actually open weaker, down by negative 1.3%, and right now the losses are being trimmed over here and only down by negative 0.5%. So it seems to me that gold itself seems to be finding some support right at the 50-day moving average that is coming close to it around 3220 level. So yesterday we do highlight there's a very tight short-term pivotal support level, which is 3252 over here, 3252. So today's intraday low on gold so far is 3245. So it's about the same at the 3252 short-term pivotal support that we highlighted yesterday before shipping this bounce, and it's now forming a impending daily hammer candlestick formation, while still impending bullish reversal hammer candlestick formation. Why is it still impending? Because the day hasn't closes yet, because now we got to wait until the end of the US session if it's going to form this pin bar with a long tail and a small little body that will indicate a potential bullish reversal candlestick on gold XAU/USD, despite the negative news flow today where because Trump's global tariffs implementation is deemed illegal by a US trade court. That means that initially see a sell off in safe haven assets, which gold is one of them. And because you know that upon the implementation of Trump trade tariffs policy, which created a lot of haphazard way of implementation, a lot of uncertainty, and that actually see the US exceptionalism team play that was previously in place since post-COVID, so that's about 5 years ago, started to get faded off over here. That means, i.e., we start to see US dollars selling off together with US Treasury bonds, and in some form there are certain bouts of downside volatility being triggered on the US stock market. So US stock market right now is being buzzed by a firm-based specific news flow, that means i.e. Nvidia, right, rather than macro over here. So but what's interesting is that as we are speaking, the dollar strengthened yesterday. All right, let me put it this between now, okay. Okay, the dollar continues to strengthen yesterday, which came in our expectation, where yesterday we flipped to a intraday trend bullish bias on the dollar strength against the euro, against the sterling, and as well as against the yen and against the Aussie. And what's interesting is that the euro dollar, the sterling dollar all came down and hit our downside support level, and the dollar yen spike up and hit the resistance level at 14710. And what's interesting is that upon hitting those levels, we start to see a bit of dollar strength pullback as we are speaking right now. All right, there's some sort of form of dollar strength that is pulling back, and this dollar strength pullback comes in line with the US dollar index, which are used as a gauge to gauge whether the broad base, whether the dollar is strengthening or weakening, is now coming very close to the 50-day moving average that is acting as the intermediate resistance at around the 101 level. All right, 101 level over here. So later I'll touch on the intraday technical outlook on the FX market, what we are expecting, especially on the dollar yen, which has already hit our resistance level after spiking up in the last 2 days. Right, very interesting movement. So what I could see over here is that we know that yes, news flow could drive up prices or drive down prices, but it also could lead to potential tipping point in terms of, we call it from a technical analysis perspective, where price action may stage that significant reversal either on the upside or the downside based on a sentiment approach. All right, over here. So yes, these are the key news flow and fundamental drivers that is actually driving the global markets right now as we are speaking. This is the key coverage I'll cover today. Now, so let us now move on to the second segment of today's daily dose, which is the intraday technical outlook on all the broad-based cross asset classes that we cover on a daily basis, starting with the FX market. All right, so as usual, let me expand my screen. Okay, so let us start with the euro dollar first. Okay, good. So I think the screen should be showing. Okay, euro dollar. So the euro dollar plummeted as expected, hit our support level at 112.20, right above the 50-day moving average, now at 111.65 over here. RSI hit the oversold region, right? Hit the oversold region, and this oversold level that's being hit yesterday came in line with very close to a previous significant oversold level at the 17.5 level. Previously, that's been printed on 12th of May, and upon hitting this level, the euro dollar managed to shape a significant minor recovery, all right, before this corrective pullback takes shape. And this corrective pullback takes shape after doing a retracement of that prior significant minor recovery scenario from the low of 13th of May to the high of 26th of May. The price action really hit a 50% Fibo retracement and coming very close to the 61.8% Fibo retracement at the 1.12 figure level, which is slightly above our short-term pivotal support that we have for today at 111.65. That also confluence with this rising 50-day moving average. So with that, we now flip back our intraday technical outlook to a bullish bias on the euro dollar, looking out for a potential minor recovery in the first step on the intraday basis. Two key intermediate resistance level to watch for today: 1.1280, above 1.1280, that means it's a reintegration back above the 20-day moving average that will lead to further impulses for this recovery scenario to play out, exposing the next near-term resistance zone to look out for on the intraday basis. That will be at 1.1350 / 1.1375. Only a sudden bearish push down and a hourly close below 111.65 that would invalidate today's intraday bullish bias for that recovery scenario and flip the bias back towards the best to expose the next near-term support level at 111.20, followed by the medium-term pivotal support area at 110.70 / 110.50. We also coincide with the former long-term circular descending channel resistance from January 2008 high, now turns into a pullback support level, where previously the bears managed to flip back to a bullish bias stances on the 12th of May this year. So that's for the euro dollar. Watching very closely 111.65 as we flip back to a bullish bias for a potential recovery scenario. Next up, sterling dollar. All right, so the sterling dollar also came down as expected, almost hit our support level at 113.95. And if you do the Fibo retracement of that previous minor up move phase from the low of 12th of May to the high of 26th of May, price action hit the 38.2% Fibo retracement, coming close to the 50% Fibo retracement, which is the 20-day moving average at 133.50. So the sterling dollar seems to be in a much better shape than the euro dollar, as price action has not broken below its 20-day moving average. So I'll be using the 20-day moving average that is synchronizing in line with this graphical key short-term pivotal support level at 133.50. We're so very close to the 50% Fibo retracement of that previous minor up move from the low of 12th of May to 26th of May. So this will be my pivotal support level, 133.50 on the sterling dollar. We'll flip back to a intraday bullish bias stance for a recovery scenario that may take shape. Two key intermediate resistance to watch out for today, 135.20 followed by 135.55. Only an hourly close and a bearish breakdown below 133.50 will invalidate the recovery scenario to flip the bias back to the best again, to see a further weakness to expose the next near-term support level at 132.60 and even 132 figure level, which is corresponding to the rising 50-day moving average as well. So i.e., in a nutshell, flipping to back to a bullish bias recovery scenario using 133.50 as my short-term pivotal support for the sterling dollar. Next up will be the Asia Pacific currency against the dollar, starting with the Aussie dollar over here, right? So the Aussie dollar now continues to trade downwards over here, as you could see. So now almost coming close to our support level at 63.90. So the Aussie dollar now is kind of trading a range within a range configuration, as it continues to be in trading this kind of complex sideways range, a very choppy one since the low of 16th of April. Then within 16th of April, on 16th of May, there's another range within this choppy range configuration. And what's interesting over here is that the hourly RSI starts to trace out a bullish divergence. Price RSI start to slope upwards, whereas price action continues to slope downwards as it approach this support level that we have yesterday at 63.90, which is the lower limit of this minor range configuration that is in place since 15th of May. So given this bullish divergence that's being seen on the hourly RSI, indicating the lack of downside momentum, I will be more cautious right now, flipping to a neutrality stance for today on the Aussie dollar. Okay, using 63.90 as the lower limit. And the upper limit will be the 200-day moving average, and as well as the minor swing high that got rejected on 28th of May at 64.55, pardon me. Okay, let me, oops. Okay, so neutral between 64.55 and 63.90 for today over here, unless we have a hourly close and a breakout above 64.55, also closing above the 200-day moving average, then potentially we could see a minor push up to revisit 64.90 in the first step. So that's for the Aussie dollar, given this bullish divergence that's being seen on the hourly RSI, indicating the lack of short-term downside momentum. I'll be more cautious on the bearish side of the story and flipping to a neutrality stance for the Aussie dollar for today between 63.90 and 64.55. Lastly will be the dollar yen. So the dollar yen managed to push up as expected, hit our resistance level at 146.10, and upon hitting 146.10, we now start to see a bit of a bearish reaction of this level in the last 3 hours of in the last 3 hours during the Asia session. All right, starting from the 9 a.m. mark, all right, today. So with that, I will use then where the price action actually stopped is right exactly at the golden ratio of that minor decline sequence previously from 13th of May high all the way down to this Tuesday intraday low, 27th of May, which is the golden ratio of 61.8%. over here before stalling in the last 3 hours, so indicating there's some form of a lack of conviction by the bulls to push prices higher above 14610. So I will use a slightly higher pivotal resistance level 14710, one big figure higher, 14710, which is also the minor swing high of 14th of May, and also the 76.4% Fibo retracement of that previous minor decline phase from 13th of May all the way down to the low of 27th of May, which is at conferencing with 14710. So 14710 short-term pivotal resistance level, we will flip back to a intraday trend bearish bias on the dollar yen. Two key intraday support level to watch for today will be 14485, followed by 14 figure level that where dollar yen managed to see that last 1 day of bullish move, which is the swing low of 27th of May to 28th of May, that is attracted deep bias to push the steep intraday move on the dollar yen. If 144 gives way to the downside, then the odds will start to increase for the bears to revisit 14235 next. However, if price action starts to do a bullish move and a breakout and hourly close above 14710, then this corrective rebound sequence will continue to extend to the upside, exposing the next resistance level at 14860/149 figure level, which is so confluence with the 13th of May minor swing high area. So that's for the dollar yen, flipping to a intraday trend bearish bias for a setback in the first step, using 14710 as my short-term pivotal resistance level. All right, so now let us now move on to the major stock indices over here, starting with the Hong Kong 33, representing the Hang Seng Index. So still recall in the last 2 days, we do have a bearish bias for this corrective decline to play out from the recent high of 21st of May. And this corrective decline almost hit our support level at 22,970, which is also the 20-day moving average. And right now it starts to see a bullish reversal from the 20-day moving average by staging this gap up. There's this gap up over here. All right, so with that, and also if you look at the hourly RSI, also managed to stage a bullish breakout as well, right, by linking the previous series of lower high. All right, so there's this bullish breakout right above the 50 level, so indicating that some form of bullish momentum has started to creep back into the Hong Kong 33 CFD index. Okay, so with that, I'll be using a rather tight short-term pivotal support for today, which is just below the 20-day moving average at this 22,970. Okay, pivot. Okay, so this will be my normal support level. Oops. Okay, so let me tidy up. 22,970 short-term pivotal support level, flip back to a intraday trend bullish bias for the Hong Kong 33 to potentially kickstart another round of impulsive up move sequence. Intraday resistance level to watch in first step, will be at 23,600. Above 23,600, may revisit 23,970/24,040 next. Okay, which is so close to the minor swing high of 21st of May, and as well as the minor congestion area previously from 20th of March to 24th of March. Only a sudden bearish reversal and the hourly close below 22,970 that will invalidate today's intraday trend bullish bias to see another round of choppy corrective decline sequence, exposing the next near-term support level at 22,680, which will confluence with the 50-day moving average as well. All right, so i.e. flipping to a intraday trend bullish bias stance due to positive element that I highlighted on the Hong Kong 33, using 22,970 as my short-term pivotal support level. Next up will be the Japan 225. So the Japan 225 managed to rally and integrate back above the 200-day moving average. So price action didn't actually fall down much as expected to the 37,270 level, but managed to stage that reversal. So I got to respect the current price action right now. So potentially what we are seeing now is the start of another impulsive up move sequence unfolding in the Japan 225. So I'll be first support level to watch will be at the 200-day moving average over here. So what I'm going to do now is I got to tighten up the pivotal support level because it has really risen by a fair bit and clear above the 200-day moving average. So 37,925, right? So this level here, okay, let me put it in writing. 37,925. 925. All right. So this will be the normal support level. Okay. 37,925. Short-term pivotal support level, which is the 200-day moving average, flip back to a intraday trend bullish bias above 38,460, exposes the next resistance level at 38,850 next. However, if price action starts to fall back again and have a bearish breakdown with an hourly close below 37,925, today's intraday trend bullish bias will be invalidated to see a choppy corrective decline move unfolding, exposing the next near-term support level at 37,610, 37,270 next. Right, so that's for Japan 225, flipping back to a intraday trend bullish bias as price action trade above the 200-day moving average, hence using 37,925 as my short-term pivotal support. Next up will be the Germany 30. So the Germany 30 managed to orchestrate that minor pullback as expected. So minor pullback managed to survive right above the short-term pivotal support level at 23,895. So as the European session kickstart thereafter, where more liquidity starts to come in, the gap up in today's Asia session over here, which is at 34,125. That will be my first support level to watch. So still maintaining that intraday trend bullish bias on the Germany 30, representing the German DAX. Resistance level on the upside to watch out for today, 24,000 unchanged, 24,440 slash 560, followed by the next FIBO clustering level or zone at 24,730 slash 790 next. Only a push down and a bearish push down, a bearish push down, with an hourly close below 23,895 that would invalidate today's intraday trend bullish bias to see the start of another corrective decline sequence, exposing the next near-term support level at 23,675, which is the rising 20-day moving average and the previous gap up support of 23rd of March and 26th of 23rd of May and 23rd of May to 26th of May over here. So if price action comes down to this level, I'll be looking out for signs of a bullish reversal candlestick to see whether there could be a potential chance for price action to flip back to a bullish bias again on the Germany 30. So for now, still watching the 23,890, still watching the first support level at 24,125, which is the gap support that's being formed in today's Asia session as we approach the European session thereafter. And the key pivotal support remains at 23,895 to maintain our intraday trend bullish bias on the Germany 30 for today. All right, next up will be the major US stock indices, starting with the US Wall Street 30, representing the Dow Jones Industrial Average. So the Dow Jones Industrial Average managed to clear above the 200-day moving average, which is now acting as a first support level at 42,440. And with that, I'll be using yesterday's US session low, which is this minor V-shaped recovery as my pivotal support level, which is 42,080. So as long as 42,080 tighten adjusted short-term pivotal support holds on the US Wall Street 30, we will still maintain that intraday trend bullish bias. First resistance level to watch will be a zone at 42,870 slash 43,085, followed by the one-time FIBO extension at 43,290, drawn from the low of 23rd of May. And this 42,290 graphically is also this minor swing high area of 4th of March this year. Only a sudden push down, a bearish breakdown and hourly close below 42,080 that would invalidate today's intraday trend bullish bias to see a choppy corrective decline phase. Choppy corrective decline move unfolding again, exposing the next near-term support level at 41,715, which confluence with the 20-day moving average. So i.e. still maintaining that intraday trend bullish bias with a slightly adjusted upward pivotal support level for the US Wall Street 30 for today at 42,080. Lastly will be the Nasdaq 100. So the Nasdaq 100 finally able to break above that 21,440 intermediate stubborn resistance that was previously in place since 16th of May. So this will be the first pullback support level to watch out for. Price action hasn't broken above our first resistance decisively yet at 21,750. So, and with the hourly RSI at the overbought level, there could be a chance of a minor pullback coming close to the 21,440 level. So I don't want to tighten my short-term pivotal support to be so tight for today at 21,440. Instead, I will adjust it slightly upwards to the minor congestion area of 26th of May and 27th of May at 21,220. So using a slightly upward adjusted short-term pivotals with support level, short-term pivotal support level on the Nasdaq 100, 21,220, we will maintain our intraday bullish bias stance. Above 21,750 sees the all-time high area coming in at 22,200 slash 22,250, which so confluence with a Fibo extension cluster level. Only a bearish push down with hourly close below 21,220 that will invalidate today's intraday trend bullish bias to kickstart another round of choppy corrective decline sequence, exposing 21,015 and even 20,690, which is the minor swing low area of 23rd of May, and so confluence closely with the rising 20-day moving average as well. So that's for the Nasdaq 100. Next up will be the commodities market, starting with gold XAU/USD. So still recall gold XAU/USD, we have 32.52, which is the former minor swing high area of 16th of May, and 19th of May now turns into a pullback, key short-term pullback support level. Price action indeed hit this level and form a bullish hammer candlestick formation, and also the hourly RSI has also traced out a bullish divergence as well, over here very clearly. A higher low, whereas price action within this same corresponding period trade a lower low. So indicating that downside momentum has started to ease by the appearance of these two key positive elements right at the 32.52 short-term pivotal support level that we have yesterday, justifying for us to at least maintain an intraday trend bullish bias for now on gold XAU/USD. Two key resistance level to watch yesterday will be at 32.90 for sure, which is the 20-day moving average, and also yesterday's rejection level where I highlighted 32.28, where the bulls can't break above this level. So only a clear break for hourly close above 33.28, pardon me, 33.28, then that would increase the odds of a start of a fresh impulsive up move sequence to revisit 33.70 in the first step. So i.e. in a nutshell, 32.52 remains the same as my short-term pivotal support level, but two key developments have started to take shape on the bullish side of the story. A bullish hammer has been formed at the 9 a.m. Mark in today's Asia session, coupled with a bullish divergence that's been seen on the hourly RSI at the oversold region, indicating that downside momentum has started to ease off. Only a bearish breakdown of the hourly close below 32.52 that would negate today's intraday trend bullish recovery scenario to see it further dipping downwards towards the 50-day moving average at 32.20/32040, which is the minor swing low area of 20th of May and 19th of May. All right, so i.e. in a nutshell, still maintaining the intraday trend bullish bias using 32.52 short-term pivotal support level for gold XAU/USD. Lastly will be the West Texas crude oil. So the West Texas crude oil continues to shape that push up, but still maintain below that 50-day moving average, which is also our short-term pivotal resistance level, 64.06, which is also the upper limit of this ongoing symmetrical triangle range configuration that is depicted by these two purple line over here, two converging purple line that is in place since the low of 9th of April. So still watching out that 64.06 as my short-term pivotal resistance level, still maintaining that intraday trend bearish bias within this sideways range configuration. First support level to watch for today will be 61.20, which confluence with the 20-day moving average. A breakdown below it may see a slight dip towards the minor swing low area of 23rd of May and 9th of May at 60.35. Only a bullish breakout and hourly close above 64.06, then that would invalidate today's intraday trend bearish bias within a sideways range to kickstart another leg of corrective rebound sequence up move, exposing the next near-term resistance level at 65.40 in the first step. So that sum up the intraday technical outlook for West Texas Oil and those broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today? So today will be Thursday over here, right? So in Thursday, okay, 1 second, during the Asia session at 1 p.m. Singapore time will be Japanese tier 1 data, which is the consumer confidence data. Market is expecting a slight improvement to 31.8 from 31.2 from the month of May, and that could impact the dollar yen movement, the yen crosses, and as well as the Nikkei 225. Then thereafter, as we head into the European session, no key data to take note of. At 8:30 p.m. Singapore time, 1 hour before the start of the official US stock market cash session, will be the second estimate of GDP growth rate. This shouldn't be a big mover because this is the second estimate over here. And at the same timing, we have a Federal Reserve official speaking, Fed barking at 8:30 p.m. Singapore time. And from there, will be rather quiet US session. Tier 2 US data to take note of will be pending home sales at 10 p.m. Singapore time and 10:40 p.m. Singapore time. Another Fed official speaking, Fed Gooseby. And at 12 a.m. Singapore time, the EIA, the US Energy Agency, the EIA weekly crude oil stockpile change that could influence the West Texas crude oil intraday price movement. So that will be 12 a.m. Singapore time on Friday, 30th of May. And also at 2 a.m., we have another Federal Reserve official speaking, Fed Kugler, 4 a.m. Fed Daily. So it seems to me that today will be a Fed official speaking day at this point in time, based on the economic calendar. And at the start of the Asia session, very important to take note of will be Japanese tier 1 data, which is 7:30 a.m. the Tokyo Core CPI data and the Tokyo Core CPI data. Market expecting another upbeat number for the core CPI to increase slightly to 3.5% to 3.4%. As we know that inflationary trend in Japan has been rising steadily above the 2% level. So the release of this data could also potentially influence the movement of the dollar yen and the Nikkei 225, and as well as the yen crosses at 7:30 a.m. Singapore time tomorrow. Then followed by retail sales, Japanese retail sales at 7:50 a.m. Singapore time on Friday, 30th of May, before the start of our daily dose at 11 a.m. and as well as industrial production as well. All right, so a couple of key Japanese data to take note of, starting from 7:30 a.m. Tomorrow early Asia session, 30th of May, Friday. So with that, that sum up today's daily dose of market insights. I'm Kelvin here signing off. I wish you all a great day ahead and we shall speak again tomorrow. Thank you.